Hi, it's Lori Richardson with Cornerstone Home Lending on Tuesday, June 14th. Just wanted to give you a quick look at the markets. We saw mortgage rates end the week lower last week, and we are literally sitting at the lowest levels that we have seen in years. Now, the big news for the week is what's going on in Europe. So let's take a look at that. The European Central Bank last week, or the ECB, began their corporate bond purchase program. And that program helped push bonds in Europe lower, and actually they hit record lows. That made U.S. bonds more attractive to investors, and the result of that added demand for U.S. bonds pushed mortgage interest rates lower. The really big news, however, is what's going on in Germany. And essentially the 10-year German Bund, which is similar to our 10-year Treasury note, turned negative for the first time in history. Literally, the yield is negative 0.02%. It's like giving them your money and then paying them to hold it for you. It's kind of like renting an apartment and is a little crazy, but caused mostly by the fears of the Brexit, which is the possibility of Britain making the decision to depart from the European Union. Now, we all know that that vote will take place on June 23rd, and the UK will essentially decide whether or not they are choosing to leave the European Union. If they do, I just kind of wanted to highlight a couple things here. Number one, they will be able to print their own currency, and they will actually be able to devalue it to help their own currency. It also opens the door for other countries to consider the exact same thing, like the Netherlands, who have already begun discussions around leaving the European Union. Now, a lot of my clients ask, what is the potential impact on the U.S.? It could strengthen the dollar and the euro, but analysts really are anticipating that a UK departure could be a market mover if it happens. And I think that that's a real possibility. We will probably see lots of volatility around the markets just in general if that does happen. We may see rising stock prices. We may see interest rates move lower as a result of that, but again, we'll keep you posted there. Taking a look at what's going on here at home, Janet Yellen's comments last week, she discussed May's weak job gains just in general, but she warned against reading too much into one report as an indicator of where the economy is going, and pointed out that other recent labor data has really been consistent with improvement in the labor market just in general. But she dropped key references to incoming months, referring to the rate hike. Meaning that May's data caused enough concern for Fed officials that they may be less confident that a rate hike will happen anytime soon, perhaps not in June, and perhaps not even in July at this point. So the results of that were investors' expectations of a rate hike were just kind of pushed farther into the future, and that was good for mortgage rates all around. So it's a busy week this week. We've got mortgage applications coming out on Wednesday, along with the Producer Price Index, the Empire State Manufacturing Survey, and the Fed meeting with a press conference on Wednesday of this week. On Thursday, we will see initial jobless claims, Consumer Price Index, and the National Association of Home Builders Housing Market Index, and then Friday brings housing starts. So as always, we will keep you posted. Rates are still in great shape. Like I said, we are nearing the best points that we've seen in years, sitting in the mid to low threes on conventional conforming, low threes for FHA, and mid to low fours on jumbo loans just in general. So overall, we're doing great. Please let us know how we can be helpful. Have a great day.